Hey, Chase Real Estate Investors, this is Christian Chase with Chase Real Estate and ChaseForeclosure.com. Hey, what I wanted to do is let our investors know exactly where you should be buying properties right now and like what price level and location. And there's a lot of strategy behind this. And so one of the big things is last year, back in the May of 2022 and that whole year, interest rates were swinging up and down. And so the consumers were sitting on the sidelines saying, hey, I'm going to wait. I don't want to buy something. Maybe interest rates are going to come down. Well, as of around January of this year, the consumer decided, I'm not sitting on the sidelines anymore. I'm going out and I'm making offers on properties. And so since late January, we've been seeing showings, offers, contracts, on all of our listings that we've got right now. Everything is seeing activity, and that's a result of the consumer not wanting to sit on the sidelines. And I could always tell you, when there's a lot of news going on and things like that, and talk about real estate, and maybe you should wait. Well, they do. They're going to sit on the sidelines and they're going to wait until they feel comfortable. But there is this thing called buyer fatigue or sideline fatigue, and that's what's happened. Is they've been sitting on the sidelines and they're like, I want to move. I'm going to move. I don't think interest rates are going to go down. So that's where we're at today. So that's important to know. That's where our market's at. It's a very, very robust market right now. But where are we going to go into the future? And that's what I'm always trying to look at. That's where we're at today. But where are we going to be in 6 months from now? And so this is the strategy for investors. If you're looking at buying properties to buy, fix, and sell, I would be floating my end value of a property in that 300, 330, 350 range as an end value. And the reason being is those buyers are not sensitive to the interest rates like an end buyer who buys one of our fixed up, cleaned up properties at $150,000. They're very, very sensitive. Interest rates go up a quarter of a point or half a point. It's the difference between them being able or not able to buy a property. But at $300,000 or $330,000, the consumer at that price level is like, I want to buy, I'm going to buy because I can buy. And so you kind of have to put yourself into the shoes of a buyer. I remember way back when buying my first property and my second one, third one, fourth one. I remember all of that. And what was I sensitive to at that time? On my first one, I was sensitive to the rates. On my third one, it was, I want to buy a property. This is where I want it. And I want to put my roots down in this area. So, that's what I'm trying to position our investors is buy where the consumer wants to be buying properties at. So we kind of know the price level. I'm not saying or proposing we should be buying $700,000 properties to flip or buy. We do some of those, but I'm not saying build your whole business around that. Okay, if you're an investor, but be buying probably a little bit higher on what the end value would be than maybe what you were traditionally looking at, because those buyers are going to feel very comfortable buying no matter what the interest rate is going to be at. So but then the areas that we're buying, I would say we're kind of floating in the same areas that we've been in for the last 4 or 5 years. The one thing that I would say about the south suburbs is we still see a lot of the consumers who live in the city of Chicago are moving out into the suburbs, and they want the good schools, they want the safe area. And so we continue to see that. So I'm going to be floating in those areas because that's where the consumers are really looking at. I can tell you right now, a lot of the towns that you and I have been buying properties in are still in very, very high demand, and there's low inventory. So as long as those two things meet, we're going to keep buying properties in those areas. But again, just kind of get your property price level at that, $300,000 range or somewhere close to that. It doesn't mean I'm not buying lower end properties. I absolutely will go something that's $150,000. But I'm just conscious. I want our investors to know there is some strategy behind this. And, if I could prefer the two and I wanted to mitigate some risk, I would probably go higher end, which sounds, counter to you should buy lower end because there's less risk. But these are real estate markets. So you want to position yourself into the market where the most buyers and where likely these properties will sell. So as always, if you have any questions, don't hesitate to give me a call. And as always, check out our website, ChaseForeclosure.com. Thanks.